What I'm about to show you is the closest thing that I've found to the algorithm and how the markets actually work. And it's a form of market structure. Let's get into it. Recently, I posted a trading strategy to social media in which got a decent amount of interest, and I plan to post some more. That being said, before I continue to post strategies, it's useful for you to learn some of the underlying core principles, such as market structure. Specifically, the type of market structure that I use. This type of market structure incorporates protected highs and protected lows, brought to you by Dave Teaches over on YouTube. He has a lot of content on this. If you want to learn from someone else or learn more in depth, check Dave Teaches on YouTube. This style of market structure is applicable to all markets that have decent volume, legacy, crypto, so on and so forth, even meme coins, if they have enough volume or centralized exchanges and market makers involved. Because what we're talking about is something that seems to read the algorithm. And if the algorithm is not deployed, it will not hold up. I have reduced it down to the 1 second time frame during times of high volatility news trading events, and it still seems to predict where the market is headed next. So I suggest that you learn this core basic principle of market structure with protected highs and protected lows. You can use it on any time frame, starting off here with ETH on the 12-hour. At the end of last year, we had a shift in market structure. We had a close below one of the protected lows. A protected low or high is the lowest point between a high and a candle that broke that high, represented here by this white triangle. Here we continue on. We had a close below a low, and now we have a protected high. Now the protected high can still be hit, but a candle on that time frame cannot close above it. As you will see, if we start to play the tape through, we do come back up to that protected high, but we do not close above it. Once we have this market structure shift closing below a protected low, we can start looking for reasons to get short. If we continue playing this through, you'll see for the entire rest of the next year or 6 months or so, we were in a bearish downtrend represented by continued closes below previous lows. You can see here, once we closed below that low, we form a new protected high. Again, the market should not go and close above that if we're to remain in a bearish pattern. Sometimes ranges will deviate from this, but this is a good roundabout way to recognize market structure. You don't often need to identify full trends. Sometimes if you are trading time-based, specific times of the day, such as you'll see me do with Legacy, all you're looking for is 1 or 2 of these and it means something. If we continue to play the market through, you'll see that this plays out continuously for the rest of the year. A good trader will be looking to trade in the 0.867, 0.67 fib up here, or at least in the upper half of that range. The ICT guys call that premium or discount. So you're going to want to look for pullbacks up near the protected high, and you'll be able to short or long down. You can see that trading this strategy would have been very profitable throughout the end of last year, and you can identify this on other time frames or in a bullish structure alternatively to what you see here. If we switch over to look at a different example, I have the 4-hour ETH chart pulled up here, and we can play this through in a bullish example. Again, here you'll see that we have a break in structure and we have a new protected low. The protected low is the lowest candle between the high and the candle that broke the high. You can see that this market structure plays through rather continuously for long periods of time. So if you hear me talk about market structure in any of the strategies that I post, this is where I'm getting it from. This is what I base my market structure entries on. So there it is. There you can see it. The market structure with protected highs and protected lows. This is what I use. You're going to need to know this if you want to learn some of my actual trading strategies. That is all I have for you until we get it next time. Learn this, master it. You don't need the indicator to do it. You're able to do it by simply drawing lines when you have a high. You can draw a line from that high, and when a close happens above the high, you can yourself identify the protected low. It is the high that broke the previous market structure is what we are drawing from. And each time we have a high above the high that broke market structure, you get to reset this process. Anyways, there it is. Learn this, master it. Let me know if you have any questions. We can do a follow-up video.